Hello friends. So today we are starting with a new topic, that is posting or transactions in leisure. So posting of transaction in a leisure is very important. Why? Because it is a very important step in the accounting cycle. How we proceed is always there is a transaction, that is in a normal language of English, and then we convert that transaction into accounting language, that is known as journalizing. After journalizing a transaction, then we post the same entry into the ledger account. So this process is known as posting. So making a journal, preparing a journal is a very important step in the whole accounting cycle. It further helps us to proceed with the accounting procedure so that we are able to reach to our profit and loss that the company has made. So let's start with it. What is a ledger? In an account, transactions of one nature are posted. So ledger is group of accounts. So many accounts are there. When we put them together, it becomes a ledger. So in any one account, transactions of one nature are posted. All the accounts put together constitute a ledger. A ledger is a book which contains a permanent record of all transactions in a summarized and a classified way. It is a book which is used to prepare a trial balance, and from the trial balance, financial statements are prepared. Ledger is also called as principal book of accounts. So this is a general definition or general meaning of ledger. Now ledger is very important, that we all know. So what is the utility of this ledger? Why do we need this ledger? Essential for preparation of financial accounts. We are supposed to prepare financial accounts. So for this, it is very essential to prepare a ledger. Why? Because it provides necessary information about various accounts. Personal accounts in a ledger shows how much amount of money the firm owes to the creditors and the amount it has to recover from the debtors. The real account depicts the value of properties and the value of stock. Now value of property, value of stock, they keep on changing. So ledger gives us the ultimate information or real-time information about what is the current value of stock and what is the current value of properties a company is possessing. Nominal account depicts the source of income and also the amount spent on various items. Now here comes a very important statement. The process of transferring the information from the journal to the ledger is called posting. We always say that we are posting the entries from journal to ledger. So this entering of information, when we transform information from journal to ledger, this process is known as posting. Now general ledger, what is a general ledger? Your general ledger is a record used to sort and summarize business transactions. Now why do we use the word sort and summarize here? In the last slide we said that every kind of account has a similar kind of transaction. Only one kind of transaction are recorded in one account. So ultimately sorting and summarization of transactions are done. In your ledger, record transactions using debits and credits. Now debit and credit are two important sides and they must always balance with each other. Number of debit should always be equal to number of credits. If they don't balance, that means that financial statements are incorrect. Some inaccuracy is there, some difficulty or some fault is there. Your general ledger provides the necessary information to create financial statements. What kind of statements? Balance sheet, cash flow statement and income statement. So why these statements are important? Because they give us clear snapshot of our business finances. How our business finances are used. Are they effectively used? Are we making some money out of these finances? Are we earning profit or not? our position is improving in the market or not, are we a good business entity or not. So all this information are revealed by our financial statements. Now it becomes very important to talk about journal entry also before talking about the ledger. Why? Because we have to transfer information from journal and we have to take it to the ledger. So therefore it becomes important to revise journal entries also. Every time your business makes a transaction, you must record it in your books. The first step is to record transaction in a journal. So in journal, what we are doing is we are converting a transaction into accounting language. So this is the first step wherein we are converting any transaction into accounting language, or we are making it part of an accounting cycle. So what information does it give? It gives us the date of the transaction, description or notes of the transaction, account name and amount involved. Now there are 5 kinds of accounts. It becomes important here to mention this because every account is impacted differently by every transaction. Assets, liabilities, equity, revenue and expenses. These are the 5 type of accounts that we deal with. You all know what are assets. Assets are the resources that a company has. Liabilities is the amount that we owe to outside parties. That is the borrowed money that we can say. Equity is the capital contributed by the shareholders. Revenue, we know whatever we generate out of the operations done is revenue. Expenses, day to day, every time we are incurring expenses, then only we are able to make money. So we'll see how these accounts are impacted. Whenever there is some increase in the assets, that means we have few assets added to our organization, then it impacts the debit side. Whenever there is some decrease in the assets, it is shown on the credit side. Expenses and assets move in the same direction. If there is increase in expenses, again it is shown on the debit side. If there is decrease in the expenses, it is shown on the credit side. Other 3 type of accounts, liabilities, equity and revenue, they move in the same direction. Whenever there is increase in any of the 3 elements, it has impact on the credit side, and whenever there is decrease in any of these 3 elements, its impact is on the debit side. So this is something very important to be remembered while posting of entries and preparing journal statement. Everywhere this information is important. So it is very essential to remember this. Now steps in posting of account debited in a journal entry. Now 2 or more accounts can be involved in a journal entry. So one account is debited, other could be credited. So first we are talking about the account that is debited. Identify the ledger, the account to be debited. Enter the date of transactions in the dates column. Write the name of the account that has been credited. Okay, respectively account that has been credited has to be written, and 2 has to be fixed before the name of the account. Also record the page number and amount. We'll see how this is done. Same thing has to be done for the credit side. Identify in the ledger the account to be credited. Enter the date of transaction in the date column on the credit side. Write the name of the account that has been debited in the respective entry in the particulars column on the credit side of the account as by, followed by the name of account to be debited. Record the page number and the relevant amounts. So this is a journal entry sample, how a journal entry looks like, what all information does it give. So this is the date here, date of the transaction. Here we talk about name of the account that is debited. So account that is debited is always written on the top. Then name of the account credited is written under this, and under this there is description of the transaction. This is the general ledger account number, debit amount and credit amount. So this is sample of a normal journal entry. Now what is posting? Now we come to posting. We have talked about journal. Now we talk about how posting has to be done from the journal. So posting is the process of transferring the entry from the books of original entry to the ledger, that is from journal to ledger. In other words, posting means grouping of all the transactions in respect to a particular account at one place for meaningful and to further the accounting process. Posting of a journal is done periodically, maybe weekly, fortnightly, monthly or as required. So there is no fixed rule to it, how frequently this has to be done. So this is the account name. A general ledger has all this information. First account name, transaction details, amount of debit and credit and the balance transactions. So this is just the information a ledger is providing. This is the computerized format. This is again one more format of a ledger account. This is the form of a ledger. It is divided into two parts. Here we write debit, here we write credit. This left hand side is a debit side and right hand side is the credit side. We write down date here, particular and amount. If the amount is credit side, when the amount has to be credited, it is entered this side. So we'll see how information has to be posted, then we'll look to the question. So these are few set of transactions. I'll just show you how to journalize and from journalize how to post this information to respective ledger accounts. So let's read the first transaction. Shareholders established XYZ company and invested cash of $12,000. This is a trading company reselling furniture and also providing furniture maintenance services. So this is the first transaction. Let us see how this is journalized. This would be the journal entry, cash to share capital. This is establishment of XYZ. This is a description. So what all, how this journal entry is made? Cash is debited, cash account is debited, share capital account is credited. So how this information has to be taken to ledger account, how posting has to be done is, first I identify the two accounts. First account to be debited is cash. Other account that is credited is the share capital account. So I take these two accounts. So here this is on the debit side, amount is debited. Okay, so I take this amount here. I'm just talking about the amount here. I'm not talking about how account name have to be written. In this slide, we are just talking about how this amount has to be taken. So I'll just look at share account. I just look at cash account. I see that there is a debit amount. I take this to debit column. Similarly, I see this share capital, credit balance or credit amount. I take it to credit side. This is only I'm doing in this video. I'm taking the amounts to the respective accounts. Now in the next transaction, this is the journal entry. Land is debited by 15,000. Accounts payable is credited by 15,000. Buildings debited by 10,000 and cash credited by 10,000. Now these are the accounts involved. First I look at land. So land amount involved is 15,000 and it is debited. So acquisition of fixed assets 15,000 debit balance. I am just talking about how amounts are changed. Taking amount on the right side is very important. So that is why I am stressing more on how amount are being transferred. First I have to look at the amounts. Now accounts payable, it has a credit balance. So in accounts payable account, I take the amount to the credit side. In buildings, debit balance, I take the amount to the debit side. In cash, I have an amount on the credit side, I take it to the credit side. Now if I look at cash account, first I had a debit balance of 12,000, then I had a credit of 10,000. So my balance becomes 12,000. Now let's talk about the third transaction. Supplies has a debit balance of 1200. Inventory has debit balance of 6000. Accounts payable has one more debit. Okay. So I'm just talking about how amounts have to be carried forward. Cash again is debited here, so my balance becomes this. Revenue is here. Credit I'm writing with the negative sign right now. Okay. So this is my real transaction and the real ledger account. How does it used? Earlier we have just talked about how amounts have to be carried. Now here we'll talk about how account name has to be entered. So we look at the transaction first. On 1st August, goods are sold for cash rupees 2000. So this is, first we have to make a journal entry. So we'll pass a journal entry first, and entry becomes cash account debit to sales account. Cash account being debited by rupees 2000, sales amount being credited by rupees 2000. Now I'll identify the two accounts that are involved. First is cash, other is sales. So I have to take entries or post some information in cash account and sales account. First I look at cash account. In cash account there is a debit balance of 2000. So I move to the debit side and I enter the amount 2000. Which is the respective column that is credited with cash? That is sale. I enter sales account here. So on this date, I enter date, I enter the name of the account that is credited and I enter the amount. So this is posting done. Other aspect of this transaction is the sales account. So we'll make one posting in the sales account as well. In sales account, 2000 is credited, so I come to credit side. I write 2000 here. Which is the respective amount that is debited? It is cash account. So I write down cash account here. Okay. I always use buy on the credit side and I always use to at the debit side. So this is how this entry is posted. I'll repeat, this entry cash account debit to sales account is posted here, and posting is done like this. Cash, it has a debit balance, so I look at the debit side. I write down 2000 here. Then the respective amount credited is sales account. I write down sales account here. So I write down date, I write down sales account, and I write down this amount. Similar thing I'll do with sales account. Balance is on the credit side, I'll come to credit side. I'll write down 2000 here. Respective amount that is debited is cash, so I'll write down cash here. Don't forget to use buy here and to here. These become very important. So this is how ledger posting is done. We simply pick a transaction and then we find out the accounts where information has to be posted. We look at the debit or the credit balance. We come towards that side. We find out the respective debit or credit and we enter the account name. So this is how ledger posting is done. So you can practice this a lot. This topic requires a lot of practice and then you'll be able to post it correctly. Any kind of transaction, any kind of journal entry, posting procedure remains the same. Thank you so much.